Right, good morning, everyone, and welcome to this live webinar from LiveMore this morning. Happy New Year! Happy New Year to you all. Today we will be covering off this really exciting new equity release proposition, which of course has seen so much traction this week and a lot of coverage and made a lot of noise on all the socials and so on. We're really excited to deliver this new equity release proposition. Basically, it is a new year, new us in terms of the LiveMore offering. I'm Les Pick, I'm Director of Intermediary Sales here in the business, and today, thank goodness, I'm joined by Matt Evans, our Head of Underwriting, who is here to talk you through some of the more detailed moments, some of the more detailed features of the underwriting side of our criteria. So we're going to crack on today. I think we'll probably take about half an hour, something like that, to go through this proposition. And I hope that you are all as excited as we are about it. So in terms of what we're going to go cover off, we've got the introduction today, a little bit of a chat through the high-level the high-level features of this product. We'll look at the proposition, the details of the products, obviously the property, the underwriting, that's Matt's bit. And then finally, a little bit on support, how LiveMore can help you, support you as we go through, what can be sometimes quite a complex form of lending. So what have we done? We've listened to you. First, more than anything, we've listened to financial advisors. I know many of you on the call. I've seen the attendee list, so hi to those people that know me. And also thank you, because many of you have fed into this project and helped us and supported us, and a few of you have spent many hours with us and our proposition team and our underwriting teams over the last 12 months. So a massive huge shout out and a thank you for those that have been involved. We've got a customer focused offering. Look, we are now a couple of years down the line from Consumer Duty, so we knew that whatever we brought to you, it had to be a customer focused offering, Consumer Duty friendly. We've been working with that feedback, as we say, thank you to those brokers that have helped us. And of course, what we try to deliver always here is first-class service and great systems. We will cover off the Mortgage Matcher towards the end of this presentation, because that is such a helpful tool that we receive such huge feedback on, in terms of particularly post-Consumer Duty, helping and supporting advisors to be able to evidence they've had all of the right conversations around all of the different product sets that are available to our customers. And all of this comes off the back of an incredible year for the business. We don't want to sort of spend too much time dwelling on the fact that, we have grown a lot, but our teams have grown. The amount of business that we've written, year on year, lending is up over 100%. And it's widely recognised with some of our biggest partners that we were the fastest growing mortgage lender in 2024. So it's been a hugely successful year in terms of the previous year that's just gone, but we're looking to do an awful lot more and some more exciting things here in 2025. So let's have a quick look at the proposition and start to get under the bonnet and the detail of this particular product set. We do have some market leading features, and actually when you combine all of the features together, it really is a market leading proposition. For me, this is what have we built? We built kind of like a fully spec'd up Mercedes. So it won't necessarily be the cheapest product on the market, but what it will do is offer consumers fantastic value. And of course, it will give you lots to talk about. When you're talking to customers, as I have done for many years myself as an advisor, we know the kind of things they're concerned about and they're worried about. So what we try to do is design a product that, of course, is competitive in the marketplace, but also gives you something really cool to talk to your customers about when you're running through the features and the flexibilities that are currently on offer. We've got a wide range of LTVs really for the first time, and we have to identify that LiveMore was something of a niche player in the lifetime mortgage market, and one of our restrictions was our LTVs were quite low. You came to us, you said, look, I've got these properties. You would say yes, but actually I'm struggling on LTVs. So we're delighted to now offer a full range of LTVs that will compete really well across all of the major competitors in the marketplace. And then we've got a criteria designed to support various different circumstances. Look, Long gone are the years of a lifetime mortgage customer always being 70, 75, wanting 20 or 30,000 pounds to change the carpets and the curtains and decorate the house and stuff. Yes, those customers, of course, they still exist, but we also know that we're dealing high net worth customers with slightly different demands and needs, lots of change. Some customers are slightly younger, and some customers, obviously, as they live longer, say, okay, just because I'm 70, it doesn't mean my circumstances aren't going to change. I need a product to change with it. So we've got what we've designed, we think, and we hope, and certainly from the feedback that we've had this week so far on all the socials and on my phone and emails that we've received in, we've designed a product proposition that will really help people with those circumstances. So in terms of the products, what are we offering? Well, first of all, our standard product remains in place. The only difference is we're offering slightly better value, we've got higher LTVs, and we've changed the offer period to 3 months. So all of our products will have a minimum offer period of 3 months, which we know financial advisors find very, very useful, particularly in a turbulent market. Partial repayments of 10%, as you would expect, a minimum loan of 20k, a maximum loan of 1 million. Now, I'm going to leave it to Matt to talk about the underwriting side of things, but standard isn't just standard anymore. It's better than it was in terms of our underwriting criteria and the types of properties that we can accept on it. So it remains in place. It's better than it was. And now we're throwing some underwriting stuff in. I don't want to steal Matt's thunder. We then designed a product that would give clients flexibility. We understand that interest rates have risen recently. We understand that a long-term commitment is sometimes a difficult thing for people to do. This is still a lifetime mortgage. It is still there, of course, for their lifetime, but we understand that some customers require flexibility. So for that, we brought out the 5-year fixed ERC product. And we've also allowed overpayments of 15%. We realize that this may suit, for example, high net worth customers that need that flexibility, that might have the opportunity to move in future, might need that flexibility, but also have the ability to make some payments. So a fantastic product. If you imagine a customer on an interest rate of X, 6%, whatever, paying the sort of 15% per year off, you can understand that will shrink the size of the loan. And then, of course, after 5 years, they're free to look at other options. So a fantastic opportunity, a fantastic product. And what we're really proud about is, yes, there are some short ERCs in the marketplace right now, and that's great. But what this is short ERCs on a product that's priced normally with normal LTVs. So, we believe that this is market leaning into if you start to look at a fair value assessment. So that's the 5-year product, lots of flexibility there. We then listened to the feedback. I know one or two of you were really, really keen. There's one or two of you that were on the call. And I know that one advisor in particular has given us a shout out this week on the socials because we delivered a 6-month offer purchase product. Now, this is really, really good. Nobody has ever designed a specific product for purchasing when it comes to lifetime mortgages. And as you can see here, it looks very much like our standard product because it is. It's effectively a replica of our standard product. There'll be a slight increase in the interest rate for the benefit of having the security of the 6-month offer, because of course there will be fluctuations in the market that we need to be prepared for and cover off. But in reality, what this is doing is giving your customers that comfort, the security blanket of knowing that if they are in the middle of what can be a very stressful and traumatic time when you're purchasing and you're buying and you're selling property, particularly here in the UK, where of course there aren't any kind of lock-ins until you exchange contracts, it's one less thing to worry about. One financial advisor who I know is on the call today said, "This is fantastic. I'm going to take this to all of my introducers who are estate agents, and I'm going to tell them that, look, stop giving people the property that they kind of have to have, give them the one that they want to have. We now have a purchase-specific lifetime mortgage in the marketplace, helping more customers to have the kind of retirement that they deserve." So we're really, really proud of that particular product and that piece of innovation. And I know that financial advisors have been really, really complimentary of the fact that we've been able to produce that. It wasn't easy, but we're really, really glad to get that one over the line. And then Property Plus. We know that you'll love this product. We know that Property Plus gives you the opportunity to help more customers more often And we know that that product has enabled you to increase your bottom line, because ultimately with a lender that says yes when other people won't, that product has still, as good as it was, has been enhanced. So what you'll find when Matt talks about his presentation is that a lot of the original Property Plus criteria now is there on our standard product. And now we've enhanced and stretched even further the types of properties that we can say yes to, because your feedback was, look, we are saying no to properties that this sector should be saying yes to. Again, that helps you with your bottom line. And ultimately, the really wonderful thing about this is that consumers are helped too. We had a company day just before Christmas, and we brought some of our customers into the business to talk to us about their experiences of dealing with LiveMore. And we were able to say yes. And in actual fact, this was in mortgage world, but we were able to say yes when nobody else was. And the tangible emotional effect and impact that these things have when we're able to say yes when nobody else says yes is quite remarkable. And we had quite an emotional experience, particularly with one of our clients, for whom, had we not existed, had we not been able to say yes, his life unfortunately would have looked very, very different post a traumatic event in his life. So it's really, really good that we can do this, but I have to say that the entire LiveMore team has pushed super, super hard for 6 to 8 months, burning the midnight oil in order to try and deliver this. And of course, the exec team have to deliver this to our funder as well. So, we're really, really proud that we've been able to deliver a product range that should enable you to say yes more often. Getting down into the detail of the products, all of these products come with drawdown, you will be delighted to hear. So one of the big drawbacks of our previous proposition, and we know that 50%, just over 50% of the market is drawdown, was that we didn't have it. Well, we now have it. We have day one downsize protection. Again, so if you look at that 5-year deal with the 5-year fixed ERCs, we had the downsize protection, the overpayments of 15%, and then the compassionate waiver. It's hugely, hugely flexible and will cover off most circumstances and changes of circumstances that a customer may see. The ERCs on a 5-year product are fantastic, of course, but even our standard product being at 8 years is still incredibly competitive in the marketplace. And as I highlighted earlier, all of our offer periods have been increased. So it's a minimum of 3 months. And of course, we've got 6 months on the 6-month product, which we hope you will be very, very pleased about. We know that that's feedback that financial advisors over the years and the different lenders I've worked for have been really, really keen about having that security of being able to get those cases down the line, particularly where, for example, there's a volatile market and perhaps a slightly more complex kind of property type that might take a little bit longer to get over the line when it comes to the legals. We've got that ERC waiver, so we have the compassionate clause built into our products. There's no maximum age either. So if you do stumble across a 93-year-old that wants to buy a new motorbike or something, then that product, at least our products, will enable them to still release the capital that they need. So it's fantastic to be able to say that. And actually, when we looked at the competitor analysis of this product, we there were quite a lot of competitors, obviously in the 70 to 80 bracket, but then they start to drop off. So it's really good that we'll be able to say yes, again, helping you to say yes more often to your customers and ultimately improve your bottom line. And no product fees, free valuations up to £2 million valuation. So if your property is above 2 million, there'll be a contribution towards the cost of the valuation fee. But if it's 2 million or below, free valuations. They're more or less in line with the market, but it's just proof that, you add everything together, it becomes, this is why we believe it's a market leading proposition, because from what I can see, we don't fall down in many, if any, places. When we look at the drawdown itself, the drawdown facility will be available from 6 months after completion. So when you give your advice, just make sure they've got enough there to cover the first 6 months. After that, the drawdown loans, we can provide a facility from 2,000 up to a maximum LTV. And in terms of the drawdowns, they can take 4 payments per year, and the minimum withdrawal is 2K. So effectively, doing drawdown, they have to wait 6 months. They can make 4 payments. They can take 4 draws a year, and the minimum draw is 2K. So fairly straightforward. And we're really, really pleased that we're able to get that drawdown down, because although it's fairly standard in the marketplace, it's a difficult thing for a lender to deliver. And that's probably why it's taken us to now to be able to do it. So in terms of property, I'm now going to hand you over to Matt, our expert. Many of you will have been on webinars before with Matt. As far as underwriters go, I don't think I've stumbled across many in my career that are as salesy as Matt. So I'm absolutely delighted to have him here and his support today to talk you through the intricacies of the underwriting side of things.
Thanks, Les. And thanks, Les. Morning, everybody. So yeah, what I wanted to touch on was a few bits in relation to criteria, namely property, and a couple of other bits and pieces. And I'll cover up just in relation to hopefully the experience for those that have used us before, that you'll find within underwriting. But those that haven't, equally as important, what you can expect from underwriting when you do submit a case with us. But we'll focus on, to begin with, the point that Les was speaking to earlier. We've listened to feedback. We've worked really closely with the broker community, and ensuring that the customer, is at the heart essentially of everything that we do at LiveMore, and essentially around our products as well. So we've listened to that feedback. We've taken it on board, and as Les said, our proposition team has worked tirelessly to make sure that has been listened to and adhered to in relation to this new exciting product range. And as you can see here, we've moved a significant amount of properties that would have fit in the previous demise of or version rather of Property Plus, which now apply to our standard product. So that therefore now they can benefit from higher LTVs, cheaper interest rates. I won't go through all of them, but I think there's a few on here that really do scream off the page. Essentially, the first one is commercial. So we will now be able to offer properties that are close to, above commercial properties on the standard range, which was previously Property Plus. And also want to touch on the last point as well in relation to running a business from a property. It's a huge change for us in relation to our previous stance, where we essentially wouldn't have allowed that at all before, let alone on Property Plus. We had some quite strict criteria in relation to kind of what businesses could be run for a property. We've really listened to feedback and worked really hard with our surveying partner, Connells, in relation to this. They understand our risk appetite when it comes to wanting to lend on these sort of properties, and we have a firm belief that just because somebody is running a property from a business, they shouldn't be penalised with, a stricter, LTV restriction and a higher interest rate. So we're really pleased to be able to move these products from Property Plus over to standard. We've underwritten these types of properties, a lot in the last 18 months since we first launched into this space. So we know how to underwrite, we know how to work with our surveying partner, as I said, in relation to getting some good outcomes in relation to the value of these properties. Delighted that they've moved over to enhance the standard range. If we move on to the next slide, we'll also then detail the fact of, as per Les's comments earlier, Property Plus absolutely still exists. So you'll see there on the left-hand side the standard property criteria, a lot of which were on the previous slide. Just to highlight again the ones that have moved from Property Plus, but Property Plus absolutely is still a product, and it has also evolved in relation to the new proposition. Again, the ones that really that we see a lot, and you'll be pleased that still exist as a part of that Property Plus proposition, are the high service charge, escalating ground rent. So they're absolutely still part of that product. Flood zones, so where property is within a flood zone, we don't have strict restrictions in relation to the type of flood zone it's in. It's all around for us around the fact of, is that property insurable under standard terms with no excess, with excess not exceeding £1,000. Those types of properties are still properties that we want to lend on. They're the properties that other lenders have more strict criteria on in relation to their product offering. We wanted to enhance the standard products that we've spoken about, but we still wanted to make sure that there is still an option for those consumers that are struggling to be able to achieve their desired outcome, because there may be a niche aspect to that property. So it very much is still Property Plus still there. There's some additions to Property Plus. We've moved things away from it into standard because we want to make sure that we can cater for all different types of scenarios and all different client offerings that you that you come across on a daily basis.
That's fantastic. And guys, like you can see here, I mean, there are things on this list that it's great that we lend on, because we just know that we're the only people that say yes. So if you look at the propositions that are available in the marketplace and taking the feedback that you've given us, I'm really proud that we can offer these solutions, because every time there isn't a solution for one of these customers, we know the difference it's going to make to somebody's life at the end of it. And it's great to talk about products, but ultimately these products are designed with customers in mind. And from our perspective, and certainly from my perspective, being around equity release for so long, such a massive part of my career, this is I just know the fact that, for example, you just say steel framed, or whether it's grade 1 listed, or whatever it is, somebody somewhere is having a better life because we're saying yes to those pieces of criteria.
Absolutely, and I think that's absolutely right, Les. And look, I'll come on to in a slide or so time in relation to how we do look at that from an underwriting perspective. We're here to work with you, not against you, to find those solutions. And I'll touch on that in more detail. But in addition to the actual property criteria updates and proposition, we've also, which I thought was worth talking to today, we've also enhanced our criteria in relation to debt management plans, which is something that that we commonly see in this space and in this product. So we can accept applications that have debt management plans. We have a couple of different stipulations in relation to when they were taken out, which I'll cover off now. So if the plan was taken out within the last 12 months, so essentially if it's recent, we can proceed with it. It's absolutely fine. It would just need to be satisfied on completion, essentially. So prior to or on completion. Cases will also be considered when the debt management plan has been granted outside 12 months. They don't need to be satisfied in those scenarios where they're over 12 months, but in the longer standing plans that are over 12 months, we just need to get evidence that they've been maintained on a satisfactory basis. That they're adhering to the plan, essentially. It's quite a big shift in relation to what our stance has been on that in the past on this product. So I just thought it was worth mentioning it today, as I'm sure that you'll come across scenarios like that when you're speaking with customers. So just wanted to mention that.
Yeah, we have one of those inquiries actually in yesterday. So that is a thing that people do. So financial advisors stumble across on a regular basis. So basically, that's the criteria, the features. When we start to look at support and how LiveMore can support you, look, it's quite clear that the world of later life lending and advice in later life lending has become far more complex in the last few years, not just because of product types, but because of the expectations on financial advisors to be able to deliver in a product agnostic way, and ultimately deliver the right products to the right customers at the right time in their lives. And so we have, we've got a great team here, whether it's the underwriting team or the sales team, a lot of experience across those people. But in addition to that, the business has built a mortgage matcher tool, arguably the most sophisticated of its type. So this is an affordability calculator effectively. But what I love about this tool is that it gives financial advisors the evidence to prove that they've had the conversations. And ultimately, if there are 2, 3, or 4 different options available to them, at least prove that you've gone through and examined those things. What's great about this piece of AI is that in reality, 40%, 41% of the advisors that come on to the portal and start to use the calculator see an increase in the loan amount that their customers can have. There's a 33% uplift in the type of borrowing and the amount of borrowing a client can have. But 41% of instances or more, the intermediary changes the product type or something about the advice because they've used the calculator. So, 100 brokers come onto this thing with a product, a solution in mind, and 41 of those advisors change their advice because of the outcomes that are shown in that calculator. To me, that's mind-blowing as an ex-advisor. and it's an incredibly powerful tool. The outputs of this are PDFable, so you can put them on your files, and you can speak to your customers about them. So it's really important, I think, that we, of course, prove that we've had those affordability discussions. And of course, where a lifetime mortgage is right for a client, it's absolutely right, they should get one. But if there are other alternatives, they should at least be discussed, and the evidence needs to be there. We all know that post-consumer duty, we all know the letters that people have received, the Dear CEO letters and so on, over the last 12, 18 months. And the Mortgage Matcher tool just takes a lot of that complexity away from you. So Mortgage Matcher tool basically will say, your client, given their circumstances, is able to achieve X on capital and interest, X on interest only, X on a REO, and X on lifetime mortgages. And it's been great. I have to say, a lot of advisors who have been traditionally ER exclusive, it's been great to see so many of those engaging with later life mortgages rather than just equity release over the course of the last 12 months. And of course, I get to see those as those applications come in. So it's really good to see. REOs, of course, massively grown, and probably the only kind of mortgage type, as far as I know, that's actually grown throughout 2024 compared to previous years. Buy-to-lets going in the opposite direction. So there is this engagement now from mainstream mortgage brokers coming into later life world, but equally, look, it's really complex. If you've been talking about equity release for 20 years and suddenly you need to start thinking more about affordability and looking at all of the options that are available, it's great to be able to have a tool that will help you navigate that, that slightly complex area of advice. So I really do implore you, if you have not been on to the LiveMore website, get yourselves registered and play around with the tool. Just see what happens, because I'm telling you now, the one piece of feedback we will have on a daily basis, there are two bits actually. One is, I'm the third or fourth broker that this customer spoke to. I knew about your LiveMore Mortgage Matcher. I knew about the kind of income multiples you could do. And, together we found a solution. But actually, had they not got to me, this client would now be selling their home. That's the first bit of feedback that we get every day. And the second bit is, I didn't realize how much I could actually get. It's just mind-blowing how much I could actually achieve on this REO, given the fact that this client has life cover, savings, investments in the background. Maybe they've only been trading in their business for a year. Whatever it is, we're able to take more types of income in order to say yes more often. That's ultimately what this business does. So I really strong steer to you, financial advisor to financial advisor, even though I've been in lending world for a few years now, I would say Mortgage Matcher tool, and that's a non-biased steer to just go and play with it and see what you see, and see what you find out. And then in terms of our customer focused approach, Matt, I mean, I can hand over to you for this one, really. I mean, this is my sales team do some good stuff, but you also your team are very well thought of in our space.
Absolutely. Thanks, Les. And yeah, just really elaborating on what we discussed earlier, we're very much a solutions-based business. And therefore, as a result of that, we're a solutions-based underwriting function. Les spoke about it briefly earlier, but we've got a fantastic relationship with our sales team. We want to help. We don't want to be a barrier, and essentially we're not a barrier. We want to explore all different possibilities in relation to finding that solution. The underwriters are all individually mandated, and they're also empowered to utilize their mandate. We're not a lender where we hide behind our mandate and are afraid to utilize it. There is obviously situations, where we may need additional requirements. We may need to, to do a bit of work with Connells, for example, on evaluation. But essentially, we're willing to do that work. We're willing to go above and beyond, as opposed to just kind of finding an easy way out. Sometimes, we feel privileged to be part of that, that outcome. Linking back to what Les said earlier in relation to the customers that we deal with on a daily basis, it's genuinely making a difference to be able to then play a part in their need. And we've done a lot of work with our customers since we've launched as a lender. And I've never worked within a lending company before where it doesn't seem transactional, because you can genuinely feel the difference you're making. That's at the forefront of everything that we do from an underwriting perspective. It really is on a daily basis. That's at the heart of everything we do, and therefore then you will see that in the way that we work and liaise with you. We will find a way to say yes. We'll find that solution, and we'll work with you in relation to understanding that these cases, these individuals, the properties a lot better than we do. We want to get that insight from you. Essentially, we want to then take that away, liaise with our valuation team to be able to then find those solutions. And as I said, fundamentally, we're here to help. We're here to enhance this offering that we've got, and not be a barrier to those outcomes that we're all looking to achieve for customers.
Thanks, Matt. And definitely that's the feedback we get from a vast majority of our broker friends and your team, Matt, which is a growing
Yeah,
team.
absolutely. Yeah, it's always good to get the mugshots on right at the end. So this is the team. All the underwriters here are mandated on our equity release product. Some of you would have worked with before, some you may not have, but you will be in the foreseeable future, which is really exciting for those that haven't worked with us. But as I said, we're always on hand to proactively assist in whatever way we can, and to work with you, as I said, to find those solutions. And a tangible example of that is property referrals. So if you do have a property that we've discussed today, speak to one of Les's team about it. That comes in directly into me and my team to be able to then again look into that work pre-application as well in a lot of scenarios, that we can provide as much level of comfort as possible. Again, we're willing to do that work to find out around that specifics that you might have struggled to place a case elsewhere. Just want a bit more clarity on a certain type of property. We're always open to getting involved at whatever stage in the process that we need to. And yeah, if we've not worked with you before, really look forward to working with you in the future. And those that we have, you'll notice no difference to the service standards that you received in the past.
Yeah. So whenever a business gets ridiculously low rates or a new product set or whatever, I know that financial advisors will be okay. Are they geared up for this? Matt and I have worked together really closely over the last, particularly over the last 3 months. We've been developing this product, actually, by the way, for a long time, but certainly over the last 3 months, to make sure that everything's geared up service-wise. So we are ready. We're ready for those applications. And in actual fact, many of you on the call will have noticed that we ran hot. We did a little experiment towards the back end of last year just to see, what kind of engagement we could get if we really enhanced our proposition. We dropped our rates. We saw a huge increase in terms of the quotes and the apps that we took, but everybody remained calm and the service standards maintained. And the overwhelming feedback was that can't believe that you went from being this tiny little niche lender to having the mainstream rates, to having the uptick in business, but also to maintaining service. So we are ready for you. Thanks, Matt. And then finally, all that really remains is to say thank you. These products are available now. They have been available since the 8th of January. They're on AdviseWise, they're on air. So jump on your sourcing tools, have a little look at them, see where our positioning is against the competition. It's going to be a tough year, right? We've got an economy that's slightly unstable, should we say, in certain regards. I mean, it's a complex situation where you've got potentially inflation and higher interest rates as you are teetering on the edge of a recession. So that's a slightly odd scenario, but. And of course, gilt yields have gone up recently, and that starts to put a pressure on the lenders. We'll do our best to be as competitive as we can. I promise you that we will do our best to maintain service levels at the highest level in the sector, and we'll continue to support you as we go through the year. I am hugely proud of what we've delivered here, and I just want to say thanks to all those people that have been so kind this week and said so many nice things to us. Many of those things I've shared internally. So the people like behind the scenes, Matt's team and many other people that work in product and development and all of these things, and policy and compliance and legal, the people that go and get the funding, all this stuff, all of this work that's gone in for the last 12 months is, it's hugely gratifying when we see the thanks that come off the back of it and the well dones. So most of the stuff that you all put on LinkedIn and stuff, we've made sure has been shared internally. So thank you ever so much for your support so far. We really hope that we can continue to deliver this proposition and develop the proposition further as we go through the year, and become a major player in the lifetime mortgage world. Guys, thank you ever so much for your time today. I wish you a hugely successful 2025, and I hope in some small way LiveMore will have been part of that success in terms of helping you with your bottom line. So thank you very much, and we'll see you again soon.
Excellent. Thanks, everybody.